Hi, I'm Leena Rao. Welcome to the Ask a VC show where we put VCs in the hot seat. We are joined by Bipul Sinha, partner at Lightspeed Venture Partners. Thank you so much for joining us, Bipul.
Thanks for having me.
I want to go into your bio just a little bit before we start. You focus on investments in cloud services, infrastructure, as well as also on the consumer side, social utilities and apps for Lightspeed. And you've backed a number of companies, Nutanix, PernixData, Bromium, Peel. You've also backed Pulse, which was acquired by LinkedIn, and Live Profile, which was acquired by RIM. Welcome. We're really excited to have you, especially
Thanks.
Considering your sort of real in-depth enterprise experience. And a lot of our readers ended up sending us some great questions around the enterprise. The first one is, enterprise business as we know it is different than selling in the services market. How do you establish the trust factor for enterprise customers as a new startup in the area? And can you give us any pointers around selling in the enterprise markets?
That's a good question, because the selling motion for enterprise is quite different from like a consumer startup. Enterprise solutions are typically targeted to businesses and around their IT needs and IT infrastructure. So the most important thing for the enterprise startup selling into a business is to really understand how are they doing business today and what kind of infrastructure business application needs they have, and how does your solution fit into an existing framework that the customers are already using. Mm-hmm. Because they don't want to rip and replace their current solution with a new technology, because technology coming from a startup is very risky.
Right.
And they don't want to take that much risk. So the best kind of startups that I like selling into enterprise is a very disruptive solution, but extremely non-disruptive way into the enterprise. So for example, I have a company called PernixData. Uh-huh. PernixData builds a flash virtualization platform to speed up your storage platform. The way they are selling into enterprise is they are saying that keep all your enterprise storage infrastructure as it is. Take our software solution, put it into your server in a scale-out manner, and get an order of magnitude performance advantage. And that's the right kind of enterprise businesses that we like to back.
You know, I think why I like this question, and sort of dovetailing from what you've said a little bit, is that it's been said sort of time and time again that the sales model in the enterprise world has changed. You know, selling software to big companies has changed, and it's not the same way that, you know, Oracle did it. And you worked at Oracle, so what's your perspective on that? You know, like, how has the sales model changed?
So the big change, as I see in the startup ecosystem, is this movement from sales-oriented businesses to a more product-oriented businesses. And the buyer of business application and technology are also the users of these business applications and technology. In the last generation, some people would make the decision, but they would never use the product, and others would use the product, and that has changed. As a result, people are selling product to the end user, and they are going bottoms up. So they are finding sales guy, line of business users, and they're selling it to them. And that's how they get the initial distribution. And then they go up and they start selling the enterprise solution. But there are still a number of enterprise companies, and very, very successful. They actually sell top down and go to CIOs or their reports and then show their value prop. So if you are selling products which ASP of like $50,000 or $100,000, you have to go higher up in the organization. But if you are going like seed the platform, go bottoms up, then you can sell and you are selling the product for $500 or $1,000, then you can go bottoms up. So it depends on the ASP that you go into the market.
What would your advice be for sort of establishing a sales team and model when it comes to, you know, building an enterprise startup? You know, do you have any sort of advice when it comes to establishing, you know, your sales team? What do you want? What do you want that team to look like, different from what it was, you know, at some of the incumbents?
So one thing to understand for an enterprise startup is that the incumbents have solution, and they have a lot of market penetration and distribution already figured out. So for you to get into a business and start to sell your solution, you have to really understand how your product is providing a very disruptive value proposition to your customer and how it fits into their world. And then you have to think about what kind of pricing it can sustain. So if you have a product which has what I call unit use case, where a single business user can use it, then we want to have a freemium kind of model where you give the business user a way to try this product and use this product in a limited functionality. And then if they want advanced use case, then you start selling them the product, and then you move up. And when you have a number of people in the organization doing that, then you have this SaaS freemium kind of business. But if you have a product where going in you have a number of people using it, or ASP is higher, then you need to have a combination of an inside-outside sales team, where if it is a $30,000, $40,000 deals, then inside sales team over the phone can sell those products. And if it is a $100,000 deal or above, then you need to have like a sales rep, like going to the customer location and describing the value proposition. So what I advise my startups is to really understand how the market motions are going to be, and then devise your sales strategy based on that. So a combination of the market motion and product positioning and delivery really dictates how you want to build your sales team.
That's very good advice. I want to switch to one of our other reader questions in a different area of the enterprise world. The question is, besides flash technology and flash virtualization, what do you consider to be the most interesting niche within the software-defined data center space in terms of where we're going to see the most activity?
So software-defined data center is still nascent in its evolution. And most of the action that we have seen is in the storage space, somewhat in the initial networking virtualization space. But if you think about the next generation data center, it will all be x86 and directed by the software. So software will make some of the x86 as a storage, some of the x86 as networking. So the management stack of this new virtualized standard data center is going to be very important. So really understanding that how the network, storage, as well as compute memory can all bring together in a platform where it is all homogeneous standard hardware and everything controlled by software. So I think that would be an area where there will be a lot of innovation in terms of the management stack.
Have you seen any interesting companies in that area doing that, or is it still sort of an opportunity to be had?
This is an area that people have been paying attention to. One of our portfolio companies called App Dynamics, they help application performance management, and that company is very rapidly growing. And we are seeing a number of players thinking about that whole space from different angle. And also there's an opportunity to have a holistic infrastructure management on top of software infrastructure management on top of this standard x86 based hardware systems.
Interesting. Well, I want to now jump to a different topic, a topic that you're also probably pretty familiar with, which is the VC world. And this question from a reader is, how does a VC firm see accelerators? And do you see them as competitors or an opportunity for deal flow? So accelerators like Y Combinator and Techstars. Do you see them as deal flow? Do you go to demo day? And
I do, actually.
Yeah.
I actually go to demo days. I have a good relationship with a number of accelerators. It's very interesting because as the cost of starting businesses have gone down, there is this democratization of entrepreneurship where a person coming out of college or dropping out of college can start a company with his or her credit card and really prove out the value in a limited way. And that has really enabled accelerators to help those entrepreneurs to think about businesses in a systematic way, and we really like it. I mean, of course, there's a limit to how many accelerators can exist and the number of startups that can be a viable business. But I see them as a source of deals for us, at least one step of vetting process, and also they allow every idea to be tested or experimented on.
Right, yeah.
So there is a problem with respect to the number of seeds that can sustain in a market, and then the number of Series A that can happen on top of it. But overall, I feel that let the 1,000 flowers bloom and let everyone be an entrepreneur, go and experiment on your idea, and if you're successful, you might create $1 billion business.
Well, that's a good way to end for any of you out there that want to start a business. Thank you so much, Bipul, for joining us.
Thanks for having me.